Good afternoon. More bad jobs data again this week. The world is kind of opening back up, and the Fed is signaling that they're not changing their stance in some of their asset purchasing programs. My name is Brandon Steele. I'm a financial planner with Mainsail Financial Group here in Bellevue, and we want to make sure to come to you each week, bring to you the market updates and trends and news of the week in a quick, digestible format. If this is helpful, please do follow us, and you can catch these each and every week, Thursday at 3 p.m. If you are in Washington, you're probably starting to see little snowflakes come down here. So hopefully you are staying warm and staying safe if this kind of snowstorm actually comes to fruition. I was supposed to go to Ocean Shores this weekend, actually, and let the pup run out on the beach, but this keeps going, I don't know if that'll happen. So anyways, stay warm, stay safe, and let's kind of get right into things here. As I mentioned, we had really bad jobs data again this week. Last Friday, we had the non-farms payrolls come out, and only 49,000 jobs were added throughout the entire month of January. It's very, very disappointing. I mean, this is really not a big number by any means. Obviously, it's not negative, so that's a plus, I guess. But at this point, we really need to see those jobs numbers come back, and we'll talk more about what the Fed had shared. But obviously, that's becoming a priority, it sounds like, for those in Washington, I guess, to try and get things back into place, because there's a lot of people that are without jobs right now. The unemployment rate came out that same day last Friday, and it only showed 6.3% unemployed. It's a big drop off compared to where it was, but keep in mind that there was a huge amount of people that kind of fell off because they are considered now discouraged workers. So as we all probably know, the unemployment rate is very, very flawed because it's only people who are actively searching. We saw a lot of people that kind of got discouraged and may not be actively searching now. So that number, kind of take it with a little grain of salt. But we definitely need to get some people back to work, and hopefully that will pick up now that the world's opening back up a little bit in the months moving forward. On Wednesday, to maybe transition here a little bit, Fed Chair Powell was talking a little bit. He shared that there is no plans to change any role in monetary policy anytime soon. He was talking primarily to the jobs market, saying that this is something we need to see pick back up, which is why I kind of brought that up originally. Obviously, that is on the Fed's radar as well. That's a big portion of their, their mandate, I guess, is to get the unemployment rate down. And he said because of that, basically, they don't plan to slow down their role in any way in that monetary policy and some of the benefits that they've been rolling out. But it's kind of interesting because although he says that, they kind of have. It was a very, very small thing, but you guys may remember, for those who follow us a couple of weeks ago, the Fed came out and said that they were going to slow down some of their asset purchasing in the repurchasing market. So interesting to see that, given what has actually transpired. That is a much smaller portion of some of the other things that they are doing, but nonetheless, it kind of goes against what he said. So be interesting to see what rolls out in the months ahead there. And then today we had initial jobless claims, came out at about 793,000. It's pretty much what's been, let's call it the trend, unfortunately, for a while now. And then moving into next week, we have a short week with the markets closed Monday. Again, for those here in Washington State, hopefully we aren't snowed in on top of that, but we'll have a short week in the markets. We come right back on Tuesday, I believe it is, with retail sales. And then the Fed minutes are released on Wednesday as well. So it'll be interesting to see what comes out of that, that Fed meeting too. We'll go ahead and jump into the question of the week. For those who do want us to spend some time in any other areas, or would like to submit a question of the week for us to answer here in the weeks to come, you can email us directly, info@mainsailfg.com. Again, info@mainsailfg.com, or go ahead and comment on the post. We'd be happy to address your questions through that as well, and maybe bring it up in the week's weekly updates to come. Question of the week this week is a very good one, and I think it's probably on a lot of folks' radar, but also something that maybe is kind of hiding beneath the surface as well for a lot of folks. There's this talk about potential capital gains tax here in Washington State, and what is the impact of that? What do I need to do? Do I need to be aware of this or consider how to prepare for it? What I will say is the short answer is it depends, and I don't know, and this stuff can change. But let me back up and try and be a little more helpful. The capital gains rate conversation and estate income tax and all these extra taxes have been a conversation here in Washington State for a very long time. They've come up time and time again. They've been shot down time and time again. Here we are again, where we're talking about capital gains rates for Washington State specifically. That doesn't mean it's not going to happen, right? I think because it's come up time and time again, obviously this is very important to a lot of folks. But I guess I say that to maybe prepare you a little bit in case this doesn't come to fruition, right? Again, to prepare too much into something that is purely, a thought at this point, may be shooting yourself in the foot. That said, this is important and it makes a huge difference, especially in our area. There are a lot of folks who have, Amazon stock, Facebook stock, you name it, Google stock, Microsoft stock, and a lot of their compensation is based on some of these stock awards that they're given over the years of their employment. So it's important to kind of consider this and what this may mean. If you have a large portfolio built up of stock position from your employer, I'm not saying you need to sell just to sell, but you may want to start kind of considering what that impact may be and if there's a way to maybe get ahead of any potential changes that might be on the horizon. Or maybe it's a matter of just doing it to kind of manage the risk a little bit more in case something comes to fruition. Again, it's very hard to say that this will or will not happen at this point or when it would be enacted. I think the conversation is that it would back up to the year that it's passed. But generally what we've seen in the past is that they'll give you, let's say it's passed later this year, maybe it doesn't go into effect until 2022, for instance. So hopefully you'll also have a little bit of runway where if there are any last minute changes you need to make, you can kind of address those, before the actual tax comes into play. But again, it's important to think about, but just don't get too far ahead maybe on some of the planning that you do in that arena, just because who knows what might actually come out of it. Anyways, we will definitely keep you posted more on that as we know more, as the conversation becomes a little bit more to the forefront. But I did want to address it because it's come up from a few different clients here recently and just kind of share my thoughts on what to consider. So we hope that's helpful. Again, if you do want to see a question of yours, included in our weekly updates, you can email us directly, info@mainsailfg.com, or go ahead and comment just below. Let us know what questions you have, and we'll be sure to try and help address those in the weeks to come. Again, for all those in Washington, stay safe, stay warm here if the snow does come, and we will see you next Thursday at 3 p.m. Thank you.